Question. Verification of entries in the financial books with the help of documentary evidences is called as option A. Routine checking, option B. Vouching, option C. Internal check, option D. None of these. Answer option B. Vouching. RBI is an example for option A. Chartered company, option B. One-man company, option C. Statutory company, option D. Foreign company. Answer option C. Statutory company. Interest on drawings is options A. Expenditure for the business, option B. Asset for the business, option C. Gain for the business, option D. Liability for the business. Answer option C. Gain for the business. Question. The document which contains the rules regarding the constitution, activities, objectives, etc. of the company is called as option A. Articles of Association, option B. Memorandum of Association, option C. Prospectus, option D. Share warrant. Answer option B. Memorandum of Association. Public companies limited by shares need not have option A. Prospectus, option B. Memorandum of Association, option C. Statement in lieu of prospectus, option D. Articles of Association. Answer option D. Articles of Association. Question. Contract account is a option A. Asset account, option B. Personal account, option C. Nominal account, option D. Real account. Answer option C. Nominal account. Goodwill account appearing in the books on the dissolution of partnership is closed by transferring to options A. Capital accounts in the capital ratio, option B. Profit and loss account in the profit sharing ratio, option C. Realization account, option D. Capital accounts in the profit sharing ratio. Answer option C. Realization account. Question. Proprietary funds of a business is rupees 2,40,000 and its reserve to share capital ratio is 1:5. Share capital is rupees options A. 1,50,000, option B. 2,80,000, option C. 1,60,000, option D. 2 lakh. Answer option D. 2 lakh. Schedule 10 to balance sheet of a bank shows option A. Advances, option B. Fixed assets, option C. Contingent liabilities, option D. Other assets. Answer option B. Fixed assets. Sales are equal to option A. Cost of goods sold plus profit, option B. Cost of goods sold plus gross profit, option C. Gross profit minus cost of goods sold, option D. None of these. Sales equal to cost of goods sold plus profit, option A. Goods given as samples should be credited to option A. Advertisement account, option B. Sales account, option C. Purchase account, option D. None of these. Answer option C. Purchase account. Outstanding salaries are shown as option A. An expense, option B. A liability, option C. An asset, option D. An income. Answer option B. A liability. Question. A contract in which the obligation on the part of both the parties to the contract are outstanding at the time of the contract is called as option A. Express contract, option B. Executed contract, option C. Unilateral contract, option D. Bilateral contract. Answer option D. Bilateral contract. Depreciation is the process of Option A, valuation of assets, maintenance of assets in a state of efficiency. Option C, dividing the cost of the asset over its useful life. Option D, an appropriation of profit. Answer option C, dividing the cost of the asset over its useful life. A, B and C are partners sharing profit in the ratio of 2:2:1 respectively. C retired. The new profit sharing ratio, option A 2:1, option B 1:1, option C 3:2, option D 4:1. Answer option B 1:1. Question. Right shares enjoy preferential right as regards options A. Payment of retained earnings. Option B. Payment of dividend. Option C. Payment of capital. Option D. None of the above. Answer option D. None of the above. The amount of depreciation charged under annuity method. Options A. Remains fixed for all years. Option B decreases every year. Option C increases every year. Option D recalculated every year. Answer option A remains fixed for all years. Question. The debit balance in the bank column of cash book indicates option A the amount withdrawn from bank. Option B cash at bank. Option C total amount deposited in bank. Option D bank overdraft. Answer option B cash at bank. Question. At the end of the accounting year, nominal accounts are options A. Balanced and transferred to the profit and loss account. Option B. Not balanced and transferred to the profit and loss account. Option C. Not balanced and transferred to the balance sheet. Option D. Balanced and transferred to balance sheet. Answer option B not balanced and transferred to the profit and loss account. Premium on redemption of debenture is dash account. Option A personal, option B nominal, option C real, option D none of the above. Answer option A personal. Question. If the shares are forfeited, the share capital account is debited by option A call up value of shares, option B paid up value of shares, option C face value of shares, option D issue price of shares. Answer option A call up value of shares. The process of recording financial data up to trial balance is option A bookkeeping, option B classifying, option C summarizing, option D analyzing. Answer option A bookkeeping. The maximum number of partners is mentioned in option A Companies Act, option B Partnership Act, option C Limited Partnership Act, option D none. Answer option A Companies Act. An accounting system which presents the balance sheet into two parts is called option A double entry system, option B double account system, option C single entry system, option D statement of affairs. Answer option B double account system. Question. Voyage account is dash account. Options A real, option B nominal, option C personal, option D none of these. Answer option B nominal.